Hey guys, in this video, we are going to be talking about the 3 cycles that create a trending market. So if you've been having a problem with understanding direction, when you should buy, when you should sell, what's an impulse, what's a pullback, or whatever you call it, I'm going to be breaking that down in this video. So make sure that you take notes because this video is going to go by quick and it's filled with a lot of detail. So let's get into it. When it comes to looking at your price chart, one of the first things that you want to ask yourself is, what is the trend? This is not the time when you want to be placing market structure such as trend lines or support and resistance. This is the time when you want a really good handle on saying, I can identify the trend and this is what it looks like. These are the highs, these are the lows, and this is what it is called. So the practice pair that we're going to be going over is AUD New Zealand dollar on the daily time frame. So let's break it down first based on the highs and the lows, and we're going to talk about what these highs and lows means in great detail. So let's start with the first trend cycle, and that is the trend continuation. If I were to ask you, what is the trend? What is price doing? I am basically asking you, what is the natural flow of price? Is the natural flow going up, or is the natural flow of price going down? Now, one of the ways that you can actually be able to easily read this is by the numbers alone. As you guys can see, every time we place a price note tool, the prices are increasing. The exchange rates are increasing at the highs and at the lows. So we can naturally say, because price is going up, price is in an uptrend. Now, one of the things that I want you to always remember is you trade what you speak. So the moment we say price is going up, that means that price is in an uptrend, and that means that you are the buyer. Okay? Keep it as simple as that. Now, every time price was going up in its natural flow, we're going to call that a trend continuation move. That's a trend continuation cycle, because when you're buying, you want to buy at a low price, and these are lower prices because price are at bottom peaks, and we're going to profit on the way up. So we're going to say that we're a buyer, and every time price went up, it's the trend continuation. Price pulls back, price goes back up again, trend continuation. Price pulls back, price goes up again, trend continuation. So that's the first cycle. The second cycle is when price is pulling back. So, for example, you guys can see here that even though these are highs, the highs, when they pull back and they're causing price to pull back, or they're causing price to retrace, some of you guys would even say correct, it's not stopping price from still continuing up after the pullback. So these are retracements, not reversals, but retracements, or a pull back against the natural flow of price. So it's like water. If water moves forward and you backstroke, you're moving against the water, but it doesn't stop the water from moving forward in its natural direction. Okay, it's just you going against it. And so we will call this a counter move. And anytime you look at a counter move, you may be a counter trend trader, or you may wait for price to pull back before you continue to go with the flow, right? So we can see that price went from 111,129, pulled back to 1.09219, staying above the last high. We see price went back in trend continuation cycle up to 1.11691, pulled back, staying above 1.09219, went back into trend continuation up to 1.11814, pulled back or retraced back down to 1.09900, but then stayed above 1.09528, continued back up to 1.12554. So those are the trend cycles based on an uptrend. Now, it's the same when price goes into a downtrend. It has those same 2 cycles. It has trend continuation and it has retracements. So if you ever wanted to know what are the cycles that create a trend, trend continuation, retracement, both in uptrends and downtrends. But let's talk about the other R word. And the other R word is a reversal. So let me show you guys what that looks like. So this is a reversal mock-up, still based on the same currency pair. As you guys can see, there was a low exchange rate here. There was a low here, and then price went up to 1.05289, and then price dropped, going back into trend continuation, decreasing down to 1.03292, pulling back or retracing back, staying below 1.05289 to 1.04572, trend continuation down to 1.03125. So this is what created a downtrend. We had a pullback or retracement, trend continuation, pullback or retracement, trend continuation. But look what ends up happening. The last high or lower high in this situation, which was at 1.04572, when price made a trend continuation move down, which means you would have been the seller. This is where the last buckle sellers came in. That price went up to 1.05026. And when it did that, that was the reversal. That was a reversal. So as you guys can see, you didn't need a trend line to show you that. You didn't need support or resistance to show you that. We're trading the rate in which people see value. If you see great value, price will increase. If you don't see great value, price will decrease. And that is the way the world works and operates, right? And so when price reverse, now we're saying, okay, this is a trend switcher. So we're no longer sellers. You are now the buyer, right? Because there's now greater value. So we can say that, okay, if price stays above, watch this, it's not 1.04. It's the last lowest price. If it stays above 1.03 or $1.03 Australian dollar cents and continue to go back up, we are going to be in an uptrend and the cycle start over. So we'll start seeing these exchange rates go higher, pull back, go higher, pull back, go higher. It's opposite when price goes from an uptrend to a downtrend. Okay, so let's just go back up to the uptrend now. In order for trend to reverse here, depends on how you're looking at this area. I'm going to erase this and do another mock-up again. Let's just say that price was decreasing and it kept decreasing, and price pulled back, still in retracement mode, but actually went past 1.09900 because that was the last bulk of buyers in the last trend continuation cycle. Then we will be in a reversal. So we would no longer be looking for buys. We would now become the seller as long as price could pull back, because remember, in trading, we need pullbacks to minimize the drawdown, to minimize having a huge stop loss, right? That's why pullbacks are important. Retracement cycles are important, all right? The further it pulls back, the more money you make. So if it can stay above if it can stay below 1.12554, then you will become the seller. And then you will see the cycle start over. It will go from pullback, trend continuation down, pullback, trend continuation down, pullback, trend continuation down. Now, I want you guys to know that sometimes in trading, it's not easy, especially when you add more terms. It's what's called the retracements, pullbacks, or corrections. It's whatever floats your boat. Same for trend continuation. You'll hear people call it an impulse lag. And it's whatever you want to call it. But as long as you remember that there are 3 cycles. Trend continuation, retracements create uptrends and downtrends. Reversals reverse the trend. It reverses your action on the chart. So you go from a buyer to a seller, or a seller to a buyer. All right. Now, key thing to remember is time frames. The lower in time frames you go, the more fluctuations and cycles you're going to see, the more reversals you may see. The higher in time frames you go, you may see less fluctuations because you're seeing bigger candlesticks, and you're going to see less reversals. So I want you guys to remember that. But here's what I would like you guys to do to get you used to seeing these trend cycles. Go to a higher time frame, start on the daily, and start looking at these highs and the lows and using the price note tool to spot out where the high is, where the low is, and name it if it's either in a pullback cycle, trend continuation cycle, pullback cycle, trend continuation cycle, reversal, and see how you would actually trade that differently, or observe it and analyze it differently, okay? So let me know your takeaway from this video. Like the video if you found value, and share it if you would like other people to know the knowledge that you just learned too. Thank you guys for watching, and I'll see you guys in the next video.